On Friday, the Monetary Policy Committee of the Reserve Bank of India unanimously opted to maintain key interest rates, augmented its GDP growth forecast for 2023-24 to 7% from 6.5%, and sustained the average inflation projection at 5.4%. Despite acknowledging progress in curbing inflation below 5%, RBI Governor Shaktikanta Das cautioned about potential spikes in inflation during November and December, emphasizing the need to achieve the 4% inflation target. Inflation's volatility persists due to supply shocks. However, there was no immediate relief for borrowers as the key repo rate remained steady at 6.5%. Governor Das highlighted the moderation of food inflation from July's double-digit levels to 6.2% in October, though he underscored the significant influence of uncertain food prices on the inflation outlook. While the monetary policy may overlook isolated shocks, it must remain vigilant to prevent the escalation of food inflation spikes into broader trends. Although 5 out of 6 MPC members voted to persist with a policy stance focused on the withdrawal of accommodation, there is no indication of when the key repo rate, which has been on hold for 5 consecutive reviews after a 250 basis point increase to 6.5%, might see adjustments. Governor Das emphasized the objective is not solely to achieve the 4% inflation but to sustain it at that level of consistency. In the current scenario of excessive uncertainty, providing forward guidance is not feasible as per Governor Das, given the unpredictable nature of future events. Quantico research suggested in a note on the latest monetary policy statement that visibility on the durability of the 4% inflation target is expected to improve. Governor Das expressed concern about potential increases in vegetable prices impacting consumer price index inflation in the coming months. Monitoring cereal and pulses output and addressing elevated global sugar prices is essential. He noted the likelihood of retail inflation surging in November and December from the 4-month low of 4.87 recorded in October. The RBI projects inflation to average 5.6% in the current quarter, suggesting that the pace of price rise over the last and current months may approach 6%, the upper tolerance limit for inflation. For the January to March 2024 period, inflation is expected to average 5.2%. In conclusion, while the RBI maintains a vigilant stance amid uncertainties, the emphasis remains on preventing the broadening of food inflation spikes. With a continued pause on the monetary policy rate, the central bank aims not only for achieving but sustaining the 4% inflation target. As we navigate potential challenges including rising vegetable prices, the outlook for inflation, both near term and into 2024, underscores the need for careful monitoring. The path ahead is characterized by caution, and any adjustments in the monetary policy rate are yet to be signaled, ensuring a thorough assessment of the evolving economic landscape.